Good morning. So we've been in a little bit of a trading range here, dips ups and down, and a little bit of a rejection yesterday. Had the potential to go higher, and you can see it started on that gap up. Immediately that got sold into, which does make sense. Things were up a bunch from last week, but we've got a growing obvious line in the sand now that could get some downside momentum going if it's violated. And right down here, 395-ish, got a pivot there. That was the place yesterday as it came down there to look for buyers to show up, and they did. They didn't get it very far, so it was just a neutral day. And as I look at this, you see patterns beginning to form. I don't have any confirmation of it yet, but kind of like looking like, is this a potential little head and shoulders top? And we're going to get a break here, and then obviously where would it go? Well, it could go all the way down here. I don't think that'll happen because of the power of this move up, the gap up. And we talked about like the halfway mark. Just looking at the weekly chart, puts it around there. There's no prices in there, but I guess really just looking at this pattern, the ideal scenario is it doesn't get down to this bar's low. So maybe 390-ish on a dip. And so we'll see, does it break here? And we see prices are moving lower as I speak, slightly. That gap up that occurred yesterday after the close. And what time that is? Yeah. And coming down into that area. So just moving the cursor there. It's still in the trading range, moving lower. So, from this time frame, we always look at what's the prior bar, what's the first reference point of support, and that's the prior bar's low, which is yesterday's low. The prior day's high was resistance. It gapped up through that. It got rejected. Down it came. It held support, running in place, basically going nowhere. Does it hold here? Just thinking, thoughts random as they're coming to my mind. Does it hold here? That's what we do, is we don't have a pattern yet. So, we're going through these thoughts of what if. Well, what if it breaks here? Well, then it comes down lower, maybe to 390 or give or take somewhere down here. And then if you take this kind of a pattern and flip it upside down is what you'd want to see over here, assuming that, what happened here, it's going to go back up and take out this high. So, we're just in the middle of nowhere, so to speak, or just building potentially some kind of consolidation to reach the destination of moving up here toward the 200 and 410, which we'll see if it gets there. Should it go lower, the deeper it might come down here. Well, that whole idea starts going out the window of going higher because it just becomes a giant mess. So waiting to see a pattern. We just don't have any kind of a pattern here on the daily time frame, just of SPX or SPY here. All right, so eyeballing this again where it is in relation to yesterday's bar, a little bit past the halfway point. I'm just looking at the hourly chart, and I go and I look at the futures. So you can see the rejection. It's a lot clearer on the futures as a 24-hour chart. And this initially was bullish, wide range bar coming down toward that pivot. And it's exactly what you want to see, and it was overnight. But anyway, it spiked up and there was the gap up on SPY. It came down to support and buyers showed up. And from a different perspective, you're seeing the consolidation that's forming. And will it break here or does it continue? Can it get a topping tail ignored and hold the support? McGraw is sharing with me 3920-ish downside gamma level magnet if we break 3950. And, minor support, I guess. That pivot there. Well, that's on the futures. And, Tony, we assume so because of Tony's asking me, those of you on the social media feeds, is it a pause and refresh? we have that assumption because of the strength, right? That wide range bar. Now, we have different concepts based on our method that guide us as to what is, potentially what will be, and what will change that. Well, you've got this explosive wide range bar, bullish, extremely positive, right? Power, institutions buying hand over fist. The assumption is they're going to buy the dip. Okay, so we go here and say, okay, wide range bar, there's a void, there's minor support, and just above 3,900. We know that's subjective. There is a little consolidation there on the move up. This is a good example of, you hear me say a gazillion times, look to the left, right? So we look to the left, and on this instrument, we see this consolidation. Well, why did that happen? Because it was the reaction to this pivot high on the way up. So those looking at this higher time frame are looking at beyond what's directly to the left, and what we refer to as minor support. Those of us looking at the intraday time frames can see the reaction on the way up. And this is what will be the potential stopping point. So McGraw sharing with me in the green room here, this gamma level, which is okay here, open interest to some level as to if this, he says 3950 breaks, that's where it should go to. Well, I can see that on the chart because 3950-ish is where it's been holding. So if it breaks that, well, from gamma method, it points to here. Well, we look to the left and say, of course that's where, somewhere in here is where, probably closer to 3,900. It would most likely would overshoot that 3,920, come down here, maybe a little below, and then it reverses right back up again. Because, breaks there, jiggle and then back up. But should that happen, well, then you have got a very significant level up here that's been created as overhead resistance that's going to have to be dealt with. And so that, we look for the downside, right? We look for a downside area that things could bounce from. And this is the thought process, right? That buyers would show up from. And now, assuming that they show up and it forms a constructive pattern because of this move up, we now have a bias that we should be able to get through this area here and eventually reach this target. That's a lot of assumptions and a lot of thoughts, but that's how it goes after a power move. What would increase the probability of that actually happening? Well, all the moving averages pointing up versus down. So this is correcting within a longer time frame downtrend. So it's not as a high probability scenario, this one, as if it was in an uptrend, which really is common sense. But because those looking at too many indicators, common sense is elusive, right? Versus just saying, oh, the bigger time frame is down. Versus if it was up, there'd be a higher probability of this buying the dip moving higher. So we'll just have to see how it unfolds, right, as to what happens here. All right. So SPX, McGraw, I had written down, and I'm not crazy about it, but I'd like to see this go down and be below 3,900. If, juice down there below 3,900. And 3,900 now is 60 by 70, which isn't great, but that would be my preference. I would feel would be enough lines of defense, just below here that on today it wouldn't break. We'd be okay. And up above, I originally had written down 40-50, which not crazy about that either. You can see how close it is. But, that's 75 by 90 right now. So if it was to spike down here, I'd look for something a little lower, and I think that could be the no-brainer play. Okay. McGraw's looking out a little further out. Yeah, well, when premiums begin to contract, that's the choice. So, even looking at individual stocks, when we see, you know, the end of the week, like tomorrow or later today, and we see, hey, there's no juice, premium out there on for Friday, and say, well, if I go out to next week, is there enough premium? Well, probably you'd say, yeah. And then the next step in the thought process is, well, how far away can I get from getting hit? That's all a credit spread is, right? What's the probability of going there? So for those new to credit spreads, if I was to tell you, what is the probability of the S&Ps, go to SPX, what is the probability of SPX going below 3,700 today? You'd say, that ain't going to happen, Greg. That's a ridiculous question. I would say, okay, I agree with you, other than some news event. And I'd say, well, if I told you you could sell a credit spread down there for $1.50, you'd be like, okay, let's do it. And I would say, haha, it's not April, but it's April Fool. That don't happen. But that's the essence of a credit spread. Like if I go further out in time, there'll be more premium. Well, if I have expiration today, which this is, and I say, well, my view is below 3,900 would be a safe area. But there's not enough premium there yet. Okay. And you can see the same rejection, and right at that pivot high, totally makes sense. There'd be sellers there. I'm going to move up there. Didn't break any support, and same scenario there. And patterns have been pretty consistent, different levels, but pretty consistent on an intraday basis of being similar. And you can see they're trending down, not near yesterday's low yet. So messy price action. The Dow, we expected this was going to stall, well, because it led the way up. It's up at resistance. And, can the others go up and the Dow go sideways? They could. Or the Dow go down? It could. But, this is, it made its move. It's at this destination. You see I'm going over here to this minor support level, and there's nothing there because it's below this congestion. Now, this question comes up about looking to the left and how far, and will this hold, and all these different things that we look at. But this right was tested here, and it was tested here, which makes this level pretty important. And so when we look at the S&Ps and we looked at this level, and we look at the Dow in relation to S&P 500 and look at the same area in time, breaking here, the probability of the Dow going all the way down here is relatively good. So with that in mind, you want to keep an eye on this level, even if you don't trade these. You want to keep an eye on this level in the Dow, because if it violates that and doesn't rip right back up again, this is likely, you just assume that it's going to drag it down. And then you just look at what, the Qs are doing, and the S&Ps, what are bonds doing, the dollar. If the dollar's ripping up like it did yesterday, it was all over the place. 50 MA of what, McGraw? 30-year bond. Here's 30-year bond. Oh, you're talking to Alex. Oh, yeah. If that's what you're talking about, that is at the 50 MA, bumping its head, but you can see it's right at that pivot there. You can see it's right there. And the 10-year, moving up. And so that moving up, interest rates moving down, the relationship is supposed to be that the markets are going to like that, but they're not. And it's not catching their attention. more about them where the markets are right now. What was helping before is not being such a help. And so if we take a look at the dollar, and it's just kind of hanging here. It broke lower yesterday like it was going to dive here, and it popped right back up. And so that's a mess. Bitcoin looks like, I mean, can you imagine if you bought this and didn't have a stop in? And this is like you're saying your prayers. It's like, please, can it pop back up so I can get out of this thing? And it's like, I don't know. This thing wide range bar down. And so if this starts to break lower, I mean, maybe it drags the market down and our upside targets don't get hit. So, we'll just have to see how it unfolds. That's the way the markets are sometimes. It's great when they're trending, Silver's not doing anything, whipping around. Gold, it's a little extended there, but pretty power move. And it's maybe the relationship between high inflation and gold is beginning to take hold into next year. And, we looked at this in the weekend letter, but recession, things are different this time because 40-year inflation, but look at the 30-year versus the 3-month spread going negative, and the 10 versus the 3-month going much more negative. So this whole, recession thing, and, you should think about what happened to the red wave and all that. And conversation I had with my daughter that's going to come to visit yesterday, and thinking about, we got into a little political thing, and she, this woman stuff and yada, yada, yada. But, I gathered, hey, this thing hasn't bit her yet, so she wasn't too open-minded or concerned about what's happening in the country and red wave and versus Dems and all that kind of stuff. But I just said, well, it just hasn't bit you yet. But and I think what's going to happen looking at these charts, why am I telling you that, is historically, this is the greatest indication of a coming recession. And if we get into that next year and the markets do make another dive, I don't know how it hasn't affected the inflation prices of things yet, but in any event, I think that those that didn't vote red are probably going to wish they did. But we'll see how that all goes next year. But I think a lot of people are just complacent about what's coming. Is it over? Those charts don't suggest that it's over. We'll look back on this as we get into next year. Other than that, especially young people, exactly, Alex, because whatever, I mean, she has a job, she works. I don't know what, maybe the government may have sent her for whatever reason, but they're, they live in their own world. I guess we all did when we were young. Current events weren't so important, and you're gonna find out. Most of them, like my son, find out like, hey, it was so, I would say, liberal minded at one time, but once he got a job, and he's like, he came home and he's like, what the hell goes on here? What's all that money all my money that they took out? I said, haha, welcome to the real world. He took all that taxes out of his paycheck. So, it looks like today is probably more chop, but we'll see if, things break some support and where it goes from here. So stay out of the blender, so to speak. Getting chopped up. Oh, internals. Sentiment finally reached an extreme. So caution everywhere. Short term, we'll see how it unfolds. All yours, Dan.
Good morning. Yeah, apologies in advance here. My voice has got worse than yesterday, but I'll do the best I can. So, Greg, we had some nice comments there about reality sinking in. Oh, thanks, Tucker. And, with these big these big, I know that's the most disappointing part, Alex. With this monster bottoming pattern, as a technician, I say the bottom's in. And then, so I asked the next question, which Greg directly or indirectly was just talking about. And it's like, all right, well, what would make this take out the lows? And the answer is reality of fundamentals, of recession, of rates rising, of earnings contraction, possibly even more war rhetoric nonsense that kind of we got a glimpse of yesterday with Poland. And then I don't think it's going to happen in a straight line, but that can then, we apply our approach, retracement, et cetera, and now we're off to new lows. And so I haven't been pounding the table of just load up your IRA. I've just been pounding the table of we got a tradable balance, and I have no friggin' idea if this is the bottom or not. We're traders, so who cares? That's CNBC talk if you want to try to be a hero. All right, we didn't do any earnings options trades last night. There was just nothing I liked, but I got a couple I'm watching right now. Target. I mean, could you imagine if we sold the 150 puts? Those would be in pain right if the market opened. Ideally, this will sell off more. The bigger the better. Like Alex and I said on Facebook, gap down to 100, fall another $10. So I would love for this to fall to 140. Get an intraday climb on, we sell 2 DTE puts. AAP getting whacked. Oh, that's Apple. AAP, there's no pattern at all, but this just fits into the category of a big gap, prior low. Let's see what happens. I have no idea, but I'm gonna watch it. LOW up a little bit, not as much. I mean, this is bullish weekly, bullish monthly. So I mean, this looks like a bottom to me. And we've got a monthly W. We got a bear sandwich breakout and a 1, 2, 3. I mean, it looks fantastic. So that's on a long list. Trip is a sell setup here that we posted under yesterday's low. So that's a short watch. This little energy stock did not trigger last night. Where are you? Whatever, that little energy stock, CPG or something really. Yeah, so notice it actually gapped up and is coming in, which I like, because then it's not going to trigger unless it takes out yesterday's high. So that's good to go. Yesterday's high, it's oil. I see oil pulling in here on pre-market also, but these are at all-time highs, strong sector. Retail sales this morning really didn't budge on the number, the 830 number. Well, it kind of went down, but then recovered. So this is down because of Target. That's a big gap, ugly. I saw BBBY down. It's not earnings, I checked. So I mean, I can't imagine this thing's down this much on Target. That makes absolutely no sense to me. So I don't know. I don't know the news on this. Disney, I just read in the journal that I grew up in Miami. I've loved Disney my whole life. I went there after it was 3 weeks brand new open. And I don't remember what I paid, maybe I don't know, $24, maybe something like that. And now they're raising the prices to 187. I mean, that's an expensive day. You add in travel and some candy canes and so forth. So I just wanted to see what the stock's reaction was, and it's nothing. But that's a sell setup, just like that trip. JR asking about GRWG. It's bottoming, but the problem is without a big stop, it's a climb on the daily. So multiple time frames are not in alignment. But I'm going to add it to my core list. It looks great. Oh, I know this one. It was marijuana. I remember after 2 days here, I put it on my list. And then it kept going and I took it off my list. Wow. Yeah, but Greg, is BBY gapping down solely because of Target? Or is there other?
Well, if the broader idea, that's why I typed that in there. The broader idea is, hey, here's a reality that consumers are really drawing back, based on Target's earnings. And if they're drawing back there, they're going to draw back in other places, and it kind of snowballs. I mean, we all realize that, increasing prices, inflation 40-year high, creates concerns, and people, once they're concerned, they withdraw. And so, economists and so on want to see the real numbers. They want to see the proof, which is understandable. But now here's the proof. What's Macy's doing? And so on and so forth. As you look across different, um, retailers, are they being affected, and which ones not as much?
Oh, here's another earnings gap I forgot to mention. Zim. So this is on earnings, bottoming pattern, gap up, and it's look at that big old void. So, just for starters, 30-minute high, but I'll watch it on a pullback too. Tan Solar had a big day yesterday. Well, it's bullish. I'll just rephrase it. We're in this in our ETF trader. Here, look at run, pulling in a little bit, but has room. Fizzler has been on a tear. So this is what we call a bull rectangle. Here's your flag pole. It's consolidating. It's bullish weekly, monthly. So that, even if it takes a week to set up, unless it gets destroyed, then it's beautiful. All right, I got a bunch of alarms going off here. I got to get through. All right, well, this is a good alarm. Triple W, we shorted this yesterday. So that's in our favor, looking good. You know what? We can move stop break even already. That's a nice little dive. Alex, you're NEE.